Money is pouring into the NHL, but are the Blackhawks really winning off the ice as much as it seems? Let's break down what the latest numbers actually say, and why some fans might see them as a cause for celebration, while others may see reasons to worry. CNBC's latest NHL franchise valuations put the Chicago Blackhawks at an estimated worth of $2.75 billion, placing them seventh among all NHL teams. That valuation represents roughly a 6% increase from the previous year, which signals that the franchise continues to grow in financial strength even as the on-ice product has gone through ups and downs. In other words, the business side of the organization is thriving, even if the standings don't always show the same kind of momentum. Here's how the top of the NHL value ladder looks right now, with the Blackhawks sitting in strong company. Toronto Maple Leafs, $4.3 billion. New York Rangers, $3.8 billion. Montreal Canadiens, $3.4 billion. Los Angeles Kings, $3.15 billion. Edmonton Oilers, $3.1 billion. Boston Bruins, $3.05 billion. Chicago Blackhawks, $2.75 billion. Philadelphia Flyers, $2.6 billion. Washington Capitals, $2.5 billion. Detroit Red Wings, $2.47 billion. All 6 members of the NHL's historic, original 6, franchises land comfortably inside the top 10 of this list, which reinforces just how powerful legacy, market size, and brand recognition are in professional sports. The Blackhawks share this tier with some of the most iconic hockey brands in the world, which helps explain why their franchise value remains so robust. On the opposite end of the spectrum, the Columbus Blue Jackets come in at the very bottom of CNBC's rankings, with a valuation of $1.4 billion. That gap between the top franchises and those at the bottom illustrates how much market, history, and recent success can widen the financial distance between teams. For fans, this kind of disparity can raise tough questions about competitive balance and how much money really matters in building a winner. Digging deeper into the financials, CNBC's report places the Blackhawks 10th in the league in revenue, with earnings of about $268 million. That means only 9 teams bring in more money overall, a strong indicator of how powerful the Chicago market and fan base still are. Ticket sales, sponsorships, media deals, and game day spending all contribute to that figure, and it shows the franchise remains a major revenue engine in the NHL. When it comes to debt, the Blackhawks are in an even healthier position. They rank 25th in debt as a percentage of franchise value, with debt at only around 4% of their overall valuation. Put simply, they owe relatively little compared to what the team is worth, which gives them more flexibility and stability from a financial planning standpoint. Low leverage can be a big advantage when it comes to investing in arenas, facilities, or long-term organizational projects. Perhaps the most eye-catching number in the entire report is this: CNBC ranks the Blackhawks' EBITDA, earnings before interest, taxes, depreciation, and amortization, at $85 million, which is number 1 in the entire NHL. That means, on an operating basis, the Blackhawks are generating more profit than any other franchise in the league right now. But here's where it gets interesting, and maybe a bit controversial. If the team is so profitable, should fans expect more aggressive investment in the roster, coaching, or fan experience? Looking back at last year's numbers gives even more context. In the previous CNBC report, the Blackhawks were also ranked 7th in overall franchise value, then estimated at $2.6 billion. So, while their ranking stayed the same, their valuation still climbed, another sign that the franchise continues to appreciate even without moving up or down the league table. The stability at 7th suggests that, while other teams are also growing, Chicago remains firmly entrenched as a top-tier financial power. However, there is one twist: last year's reported EBITDA was about $103.3 million, which is actually higher than this year's $85 million figure. That means that while the team's overall value has risen, its operating profit has dipped compared to the prior year. And this is the part most people miss: a higher valuation does not always mean higher year-to-year profits. It could reflect expectations about future growth, media deals, market strength, or brand power more than immediate cash flow. So here's the big question that could split opinions: Is it a win for fans that the Blackhawks are one of the NHL's most valuable and profitable teams, even if that doesn't always translate into championships right away? Some might argue that strong financial health is the foundation for long-term on-ice success. Others might counter that record-setting profits should show up more quickly in roster moves, player spending, or fan-focused improvements. What do you think? The Blackhawks' soaring financial metrics a sign that the organization is doing everything right, or do they highlight a gap between business success and on-ice results? Do these numbers make you feel more confident about the team's future, or more skeptical? Share whether you're excited, frustrated, or somewhere in between.